Time rotations and the session template are probably two of the best kept secrets in the whole trading environment, and at the same time the most critical ones to build real edge and to be successful. I'm a Stacey Burke style trader that enhanced his system with some of his own elements, and in this video I will show you the source of my personal real edge. This is what made me profitable. This is what made me build a structured view on the market. I will show you how a session is structured, how it builds up, and how the clock gives the rhythm for the whole session and for the structure and for your trades, and that you can approach the markets in the same way every day. And there is a little riddle for you to solve in every session. So let's get into it. So, are you confused in lifetime? Is price action overwhelming you? A lot of things happening on the chart and you don't know how to place your trades, how to take your decisions, and how to make sense of everything? You're not alone. And what you hear every day, that you have to keep it simple, sit on your hands, you only need one setup, you don't have to trade movement, do not trade every day, stop self-sabotage, just keep it simple and you will be successful. But then you sit in front of the screen, price breaking out, going up and down, and you just don't know what to do, and then you jump into a trade and you get wrecked again. So in this video I will now show you how to think about that in a structured way, and how to build a mechanical process to approach that and to overcome this confusion. There's a lot to consider. If you watched my videos, or if you haven't watched them, I would encourage you to watch those, especially the 3 series. I go through the whole trading process from thesis generation to entries. Now we are within the session, so you already analyze the higher time frames, you have a thesis for your session, you have a watch list, and you're watching a set of pairs during the session. And there's still, of course, a lot to consider. This is my process how to do that, and what are the key questions and the elements to go through in lifetime. So you have to have a thesis before, of course, but then you have, of course, to reflect on this thesis constantly. Is it really confirming? Or is it not confirming? Is there an alternative thesis? Is there a counter thesis? So we shall not be rigid with our thesis. That's very important. Always stay open, never force a setup. Just have a thesis, put it on your chart, keep it in your mind, maybe write it on your heat map, and then still watch bottom up, as I always say, watch price action and see how the session's set up, and then maybe it aligns. So you reflect on the overall thesis, then you reflect on the developing setup on the day. So what's the 3 session setup? Is it a dump and pump and dump? Is it parabolic? Who is the money? What's the quality of a potential setup? And this will be what we are focusing on during this video, the intra-session setup and who is trapped. That's very important. So this is more the higher time frames. But then during the session, you constantly discuss with yourself, could this be a reversal or a continuation? Is the high or low already locked in or just forming? Where are the key levels? What time is it? That's the most important thing, and we really will dive into that. Is it first hour, second hour, or third hour? It's a big difference. And then constantly, that's the most important thing. You're not looking for a trade. You're looking for a trap. And if you see the trap, then you might get a trade. If you're watching and waiting until you get a trade, you will jump into one relatively quick. If you wait for the trap and you're constantly searching a trap, then it's a completely different thing, because you wait for the trap, and once you see it, then you look for a trade in the other direction. So that's a little mindset trick for you, because your mind always tries to find what you're looking for. So if you're looking for a trade, your mind will find a trade for you, and if this is the right one, typically not. So if you're looking for a trap, that's completely different. And if you identify a trap, then you have green light to search for a trade. That's a completely different thing. So who is trapped and who gets rewarded by the trap? Is the real move already underway and this is your entry trap? On what time frame is the trap? Or is this just a higher time frame trap and you will then get a first mouse and then a second trap? So this is something I will show you later that it's extremely critical to understand. This is what gives real edge and makes your entries safe and gives you a high win rate. And then of course this is pretty critical. This you reiterate, especially with major time rotations. I will show you what that means. So you constantly go through this list, and once you have a trap or once you don't have a trap, you start at the beginning again. You wait for the next 15-minute time rotation, and then you reflect on the thesis again. What happened over the last time rotation? Does it confirm something? Does it invalidate something? Again, developing setup on the day, intra-session setup. Do you get a trap? No? Okay, start all over. And this is what you're doing through your whole session. And then, I mean, it's still confusing, but keep in mind what your approach is, what the logic is. And multi-time frame, I mean, we discussed this in depth in my last videos, gives you guidance, gives you structure, what to look for. And now we are approaching this even a level deeper and go through this in the session. But coming into the session, you already have a structure, you know. The breakouts, breakdowns show the trend. Higher time frames. Are we in a daily breakdown? What is the weekly doing? You know, you come into the session. Where is the 8 hour and so on. So you really look at for a confirmation, as we discussed, you always look for the 8 hour and the H4 to confirm a session, and you want this to be aligned with the daily to have a setup. So I will also show you this again later. And then in the session, you look at first hour, second hour, third hour. You want to see where is the high and low of the first hour, where's the open box, and then you trade accordingly with the multi-time frame structure. Where are the fake outs? They show you the trap timing, gives the rhythm and levels. M515 closes and M15.5 fake outs trigger your entries. We will go into that again, but this gives you kind of a guidance and some security coming into the session, that you're not confused, you know what you're looking for, you're not jumping into anything, you have a clear approach and structure. And then from there, it's extremely critical once you're going through the hours of the session. I always say it's a little riddle, you know? It's a riddle, and you get constantly a piece of information as price trades through the session. So there is checkpoints where you get new information, and with this information you build the logic, the story of the session, and it's always the same riddle, the same puzzle, and you need to find out what is the story of the session, how is it building up, what are they up to, the other time frame traders, the institutional traders. What do they want you to believe? Where is the trap? And when do they really kick off the real move? Are you already in the real move, or is it the trap move? That's what you have to think about all the time. So let's go through this for a minute, because this is kind of how it builds up. So once you come into the session, what you have, of course, is your higher time frame thesis. You have the 8 hour high and low. You have the previous day high and low and close. So that's what every trader has. You know, that's the non-negotiable levels. And these PD levels, they set your strike zones. So you know, these are the levels that kind of frame the session already. So this is kind of what you have from the beginning, the levels, and you know what key times you want to watch. And then you trade into the session. Then 8:15 for me is the first critical point. There is often a pivot point. I will show you this later. If you backtest that, you will see 8:15 to 8:30. Often price comes into the session. They drag traders into the session, and then in the first hour you get a pivot, and then it pulls away from that. So often you already get your high or low locked in the first hour. Then you get an often 8:30 typical news MRN. So there might be a huge volume impact into the first hour, and you immediately mark the MRN level. So you want to see, did they push it up from a level? And are these MRN traders, are they still in the money or are they already trapped? So mark the MRN level, and this is again a puzzle piece for your session. So coming into that, what is your thesis? Is there a potential pivot point? Do you have peak formations already, potentially from the session before? And then you come into the 8-hour close, second hour, 1 hour time rotation. And then this first hour sets up. So you get a first hour high and low. That's your opening range for the session. This gives the next structure. And immediately from there, you have an 8-hour high and low, a fresh one, and a first hour high and low. And there you check already, what are they doing into second hour? Are they breaking out and continuing? Are they breaking out, failing, reversing, or are they staying inside? This gives you already a lot of information. Sometimes there's also a trade. And then along this, you check, is there a stop hunt? So did they already do a stop hunt in this process? A stop hunt is always a nice thing to see, because they took the liquidity from one side already. So the other side gets higher probability, of course. So another puzzle piece for you to put onto your chessboard, if you like. Then there might be a trade, but typically it's a quick one. I will show you later. Then New York Open. This is the New York session. Mid second hour, 9:30 EQO hits. And from there you look at the bigger picture for a moment. Are we potentially in a pump and dump or dump and pump? So are they dropping price into equity open? Then think potential long blow off. Are they pulling up into equity open level? Think potential short blow off. So that's another puzzle piece. Then equity open hits, and you immediately mark the equity open level, because again, as an MRN level, you want to see what are the traders doing with equity open. Often you get a trap one side, trap second side, and then with equity open level, you always see with the logic of time engulfment, are these traders already trapped or are they in the money? So if they pulled into one direction and you have the equity open level, you immediately see, once you're trading above, they're still in the money. Once it crosses and engulfs this equity open level, this might be the trap. So then, as you know, I look at the opening box. We will revisit that. The opening box for me is the 30 minutes from equity open to 10 o'clock. This is where the majority of the volume comes in. And then you check into third hour, breakout, fake out, or range. And there starts the real session for you. There starts off to bring everything together. You have all the information. You see the whole session, and then you have the chance to solve this riddle. Where's the trap? Where's the entry trap? What are they up to? Are you in the real move already? So as discussed, 8 hour fixes the anchor levels, equity open sets the trap, timing gives the rhythm, we will look at that, third hour shows the trade. And this riddle, you look at it every day, every session, always again, and you always look at the same elements and they always come, and then you will see there's nothing confusing. There's just different variations of the session. Sometimes it's a narrow first hour, sometimes a wide open first hour, sometimes you're in a trending session, sometimes you're in a peak formation high, peak formation low, blow off session. It's repeating all the time. You just need to structure it, you frame it, and then you see it immediately. With one view, you see what's going on, and then you have your potential scenarios. So each moment is specific. That's very, 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 very important. So go through this, print it out, put it on your wall. Let's go through this together. This is the first page I ever wrote. I went to all of Stacey's videos on that, and I condensed all of his content on this structure. I mean, he brought a lot of value around that, and he discussed this deeply. The old Stacey on the drawing board, he discussed this all the time, and I condensed all his knowledge into this structure and then developed it further. It's so valuable, and it really opens your eyes. So let's go through this again, from pre-session to post-session. What are your thoughts coming into that? Let's do that quickly. So pre-session, price coming into the session. What are you thinking? What are you looking at? So as we discussed, identify your signals, your setups, your multi-time frame thesis as basis. We will see this afterwards. Then you check immediately weekly, monthly level hit. Are other time frame traders in the market? Then you check the Asian range. Are you in breakout, breakdown, reverse, or inside the Asian range? I mean, multi-time frame with the 8 hour does that automatically, but sometimes it's also good to just look at the Asian range. Then the London session, check what the London traders did. Breakout, breakdown, reverse, or inside, same logic. Then 8H, H4 bias, it's kind of the same thing, but this is already done automatically by my approach and by TrendPredator. Does this confirm the setup? Then you check, is the high or low of the day already locked in? So do you have a peak formation high in London or in Asia already and pulling away from it with an 8 hour fake out high, for example? This is very important. Then you're already looking for continuations potentially. Where is PD close? Did we engulf it already, or is it below us? If you're looking for a short, maybe the high of the day is already locked in, but previous day close is still below us, so be careful. This is already, you see that on the chart. You already think about it before everything even starts to happen. Then stop hunt. Do we have already a stop hunt, as discussed? This is already is another puzzle piece. Do we have 3 levels of rise or fall on the day? Are we dumping or pumping into the session? Think potentially reverse. So this is everything you already consider before the session even starts. Then first hour hits and price trades in it. And you immediately check what is price doing, because typically they drag traders into the session, especially New York out of London. Then first hour, potentially, they just break out or stop hunt and reverse back in. Then you already have a thesis, or they break out and continue, or nothing. Maybe it just goes sideways and they don't do anything. And this is always the same thing, breakout, fake out, or nothing. Then first hour sets up. So it prints an initial high and low. You mark these levels and you watch. I have an indicator doing that. I will show you this later. Then pumping or dumping against the trend in first hour. This is what you want to see. Trends coming up, and then you dump into equity open. Then you immediately think continuation. Then you look at where are profitable traders. You watch for a stop hunt, and you see, if you check price action, where is the last breakout? Where's the profitable traders? Where's the money? And then often first hour locks in a high or low, as I said, 15 to 30 minutes into the session. Look at that. That's eye-opening. 15-minute rotation into the session is very often a pivot point. So they drag traders in, 15 minutes, does a fake out, and then they pull away from that. That doesn't mean that this is already set for the whole day, but often this is a pivot that stands at least for the session. Then sometimes you get a higher high or low for later in the session. News after 30 minutes, very often, as we discussed, mid first hour, news hit, trade accordingly, of course, especially if it locks in a peak formation. That's for me a very, very strong signal. Then second hour, 8 hour rotation hits, you immediately think trade or trap. So I typically, as you know, do place my trades in the third hour, but sometimes second hour is also a nice moment to place a trap. So watch for breakout of first hour, false break or range. Same logic. What are they doing? If the market moves before second hour, then second hour might put in a high or low and pulls back. Then are you on a day 3 and you get a creeping trend into equity open? Is there a channel? So immediately you think parabolic blow-off, especially DJ30, for example. I love that. If they creep into the open, sometimes you get a very nice blow-off with the open and you really want to take that first bar. The only entry for me with equity open is right off the bat. You don't take an entry 5 minutes after the open, because then you're potentially in the middle of the trap already. Only if I smell a parabolic blow off, I go in immediately first bar as it moves. Mark the open level. So I always mark the New York open level as a level on the chart. Same logic again. You want to see if the open traders, if they are in the money or trapped. Very important. Then is equity open already trapping traders? It's the same as the weekly template. So if this volume hits and it pulls away immediately, they might already trap with this move. Then you think continuation. Or are they working one side, 15 to 30 minutes? Think this might be put in. So if they're working a level, especially 30 minutes, sometimes it's also 45, but it's visible, you know, if they work it from one side and they are potentially at the low or the high of the session until there, this might be a level that's put in and then they pull away from that. Then third hour, now it gets interesting. Continuation or reversal? That's always, of course, the thinking. Is the move already ongoing and you get a second low-hanging fruit on entry, or are you working into a potential reversal? That's what you have to think about all the time. Is the move a trap move to continue higher time frame trend in the other direction? So maybe they push it up and the whole thing is a trap. Does it complete the move for a nail and bail type setup, or does it reverse, or is it a multi-day, multi-session setup? So really be aware. What are you trading? What are you looking for at this moment? Is it a nail and bail, just from high of the session to low of the session, or is it a higher time frame, high of day, low of day, or is it even high of week, low of week? You need to be clear before you take the trade. Don't think about this in the trade. You need to have the plan set before the trade. Some pairs like really to move late. In the last, or like in December, for example, everything moved very late. And this is always kind of, there's phases where they move it in third or fourth hour, sometimes earlier. So you really have to watch this a bit. But typically late movers like oil, it's always good to take it late. Then post-session, fourth hour. Often after session trade, runner into the end of the day sometimes. Sometimes the whole session was the trap and you only see that end of the session. Sometimes the real move comes then because they want to leave everyone behind. You see that often with like large news also, like non-farm payrolls. So everyone is waiting for the blow-off, for the move, and they all get wrecked in first hour, second hour, third hour. Then everyone is in despair and then they move it after the session. So really observe the whole session then for potential break in structure, overall market structure, fake outs, breakouts. Lean back and think about the riddle. You know, what's the pattern? Don't force anything. Then gap time trades. If this is more for London traders, if you trade between London and New York, probably also after New York, it's best to go with the trend. You know, don't really force any reversals late. Sometimes they come, but typically it's better to follow the trend then. And then is the session a setup for the move in the next session? So it might be that the whole thing is a trap and they just go sideways out of London into New York, and then the next session brings the real trade. Or sometimes also New York is just a pattern, it's just a setup for a London trade for the next day. So always step back and think about these things. So here more as a little reminder, we discussed this in the second video of my 3 series, the 3 session setup, and also then especially during the entry video, the intra-session setup. So this is what you always have to consider. What is the setup of the session. How does the session set up? So do you get 3 sessions of rise? Markets are fractal, as you know. The pattern is always the same. Day 1, day 2, day 3, session 1, session 2, session 3, hour 1, hour 2, hour 3. Always the same thing. So do you have 3 hours of rise for rollover and session? Potentially. Are you working a level? So it potentially puts in a higher high, then working back into a level for a blow off. Sometimes you have a peak formation high, peak formation low, blow off. Sometimes you have 3 hours into a level and then a reversal, or my favorite pattern, as you know, the open box. It almost doesn't matter what the first hour did, but very often you get in the second hour a peak formation high, peak formation low, and then it just blows off into one direction, goes one full expansion, then reverses all the way down again. So this is all intra-session setups. So very often, and if you look at my playbook, I always have the same sequence looking for setups. And if I don't see higher time frame setups, or sometimes also after news, if they wick both sides, for example, and take all the liquidity on the chart, then you wait for the session to set up again. So what are they building in the session? It's the same with the weekly template. They build potentially liquidity on both sides of the session. You have an opening range, you have an initial balance, and then you get a trade. And it's always the same logic. And very often you already have the liquidity for your trade only in the session. So you just need, for example, here with like 3 hours of breakout, 3 hours of rise, short end session to the low of the session. This is a setup that's completely independent from higher time frames. So you don't only want to be sure that the higher time frames don't contradict your setup. But this is a setup, or these are setups that you can just trade bottom up, stand alone, without thinking about anything else. You just want to be sure that it's not contradicting. If it's aligning, then this is your potential entry for a measured large move. So that's one view. And the second view, this is for me the most critical one. The first is always the intra-session setup, but the second one is the trap. So you always watch for the trap. You always step into the boots of the market maker and think, what are they doing? You know, we won't go through all of those because it will take too much time. I'd probably do a specific video on that, but I show you how to think about price action in this respect. You always think about what's the trap, what are they doing? So if they hit a level, they might induce longs. Then they pull back, they stop out the longs again, induce shorts. Then they push it up again, stop out these shorts again, inducing more longs. So they build liquidity and take the liquidity to do the next leg. So for a reversal, for example, an M formation or 3 pushes to the high, it's always the same logic. They induce longs, they stop out longs and induce shorts for the first mouse. They stop out the first mouse again, and then they lock it in with an engulfing candle and continue. So always think who is coming into the market, who is trapped, and what might be the large move. So there's a couple of patterns that repeat over and over again. M and W, of course, that's the classic one. 3 pushes to the high, that's a pattern that you can trade on every time frame, of course, and especially then also on the lower time frames. Hour 1, hour 2, hour 3, engulfment, push back, pull back, continuation. This can also be 15-minute candles. It can be 5-minute candles. So this happens on every time frame. Important is that you spot the pattern. Sometimes you get a half Batman, meaning it pushes out of New York. That's my parabolic reversal situation. So it's a very strong move out of New York, hitting a level, and then they immediately lock it in and trap those breakout traders. And then they just grind away from it, for example. Or ascending, descending triangle, also interesting. So it starts like a half Batman, so they trap a lot of shorts there already, but then they don't let them out again. So they induce longs, stop them out, induce shorts, but they don't let these shorts out again, you know? And then more longs, pull back. Shorts, don't stop out these shorts. So it depends on how much liquidity they already built. Sometimes they don't let them out. Sometimes they want to trigger more. So this is kind of a similar pattern. Here they trigger more on every step, and here they want to keep these guys in their trades. So it's a different pattern, but a relatively similar logic. And then for me, what I currently trade every day, if you follow my trades, you will see that the continuation trap. So they are really trapping people that are buying the low or the high. So this is my 3rd hour trade. I do this every day. So they come into a level out of New York, potentially. Then you have here a nice open box already. And then you hit a level and people think, okay, now that's it. They try to buy the low. And then what are they doing? They just induce longs, 1 push, maybe 2 pushes. I don't look at really at 3 pushes. Typically, they just push it up for 5 minutes or so. Then you get a wick on the next 5-minute candle, and then they lock it in, trap these longs, and they take the liquidity of these longs that are buying the low, and they just go down and do the next leg down. Then you have, of course, to be aware, is this then the first mouse move and you get another pullback for a continuation, or did they already trap enough longs? Maybe you come out of a large 8-hour fake out high, then they often just blow off to the bottom. This is what's left for the trader to decide. Is it parabolic enough to just jump in with a level cross and wait for a parabolic blow off, or do you wait for another pullback continuation? This is of course always the safer entry, but this is more a mindset thing. So always wait for the trap. That's very, very important. So this is my navigator. So there you find everything. Again, what we just discussed, this is a thing that you really can print out and put on your wall. It really structures the session with all the things that we just discussed. You know, you come into the session, you have your key strike levels, and then you see here the different phases: pre-session, 1st hour, 2nd hour, 3rd hour, after session, and you see potential trades. So you potentially get a runner into the session that's the London trade, as Stacey calls it. From a 1st hour rotation in gap time, you often get a runner into the session. This can be a trade. I don't trade that, but if you backtest it, you will see that happens often. Then session open, you never trade that. You wait for the first 15-minute rotation. This often pivots and gives you a trap move into the end of the hour often. So this can be a scalp move. Then 1st hour hits. This is a very nice trading moment. Often 8-hour rotation here. You get your 8-hour levels, and often you get a trap move out of 8-hour of the 1-hour rotation into equity open. And the good thing is they will not come back before equity open typically. So they typically drag this move into the open, and you of course definitely have to cut the trade with the open. Only if you have a very parabolic situation, end of the week, sometimes the large move starts out of the 1-hour rotation here, and then you're already in deep breakdown into equity open, then you might consider holding it. But even then, typically I cut it, because equity open gives typically a strong pullback. Then you get your open box, you get your trap move, and then the 3rd hour gives the continuation. So why holding through this pullback here? It's better to scalp that into equity open and then re-enter in 3rd hour and take the next leg as a continuation. Then discussed already the open box between equity open and the 1-hour rotation, and there is your real playing field. You know, we will dive into that on the next page, and I will give you a lot of examples then. But here now you have a lot of information on the structure of the session, and then you can see, are you trading up high or down low? Are you looking for a reversal out of an overextended situation? A reversal working into the high of the session, previous day high potentially with a long squeeze? Are you in a parabolic situation, blowing off into one direction, and so on? So it's always the same discussion. And then potentially after the session, you get a runner. So if at session close, fourth hour, typically the traps are all in. You see them and they reverse or continue for an all-in runner or a late reversal, but typically then I look for the runners, and these are the trades that sometimes not come back, and you just hold into the close. So before we go into examples, this is something I just developed for this video. I think this is very valuable, and that's what I'm doing every day. So really think about the time rotations. These are the time rotations. I mean, the whole session is a time rotation, of course, because at 9 o'clock you have the 8-hour rotation. So this is 8-hour, 4-hour rotation. Sometimes you get a big move into that as discussed, and you potentially go in with this pivot point. And you see here, the red zones are times where you definitely don't want to take a trade. And the yellow zones are moments where you might take a trade, but often it's better to let this is 5-minute bars. Often it's better to let this 5-minute bar print, to let them show their hands. And then the green zones are your real entries. So if you're waiting for a pivot point at 8:15, you might be aggressive if you think you see the pattern, but sometimes it's better to let the next candle print, and then you see, did they trap? Do they really potentially build a pivot point here? And then you go in with the next 5-minute rotation. Same with 9 o'clock. Sometimes you can take the 9 o'clock entry, trap into equity open scalp, potentially end with weak runner entry. But also here, I would wait for the first 5-minute candle to print typically, and then the second 5-minute candle is your sweet spot entry. But then as you're approaching the 9:15, this is deep red. So 9:15 is too late. I would never take a trade, because typically they just drag traders into equity open to trap them. So here you're very often in the trap zone, because equity open, large volume hits and moves away immediately, and often you don't know in which direction. So if you go into a trade here, within 1 minute you are stopped out or deep underwater. So definitely wait for equity open. Sometimes if you have a very nice setup, I like it, for example, for DJ30, you might take a first bar entry immediately after the open. But this is, for me, in the next 15 minutes, this is the only entry I would take. So immediately with the open, not 5 minutes after the open. Don't chase a move out of the open. Either you are already clear and you take an aggressive blow-off bet, or you leave it. The next moment for you to take a trade is 9:45. I don't like that much, but sometimes you have an open continuation. So you really see that the move is going on. The trap is already in, and then you have here a very short window to enter a trade, but really only this 5-minute bars, because the 10 minutes before the 10 o'clock rotation, you definitely don't want to trade again. That's the same logic as before equity open, because 10 o'clock will be a huge impact, and these 10 minutes, these two candles here often are immediately trapped. So just wait for the 10 o'clock rotation to hit, and then you enter the real trading zones. So again here, sometimes 10 o'clock is a first bar entry. Sometimes it's better to wait for the first 5-minute bars, and then the next 5-minute bar, this is the sweet spot. So you see what they're up to, you might have a nice setup, and then this is your entry. Then the 5 minutes into 10:15, red zone, because 10:15 is another volume impact. So not as strong, so you don't need to have 10 minutes of break, but I would definitely 5 minutes before 10:15, I never take a trade. So I let this hit, and then the 10:15 rotation is very often the real session sweet spot entry. 10:15 is my favorite entry. So these 5 minutes after 10:15. Then 10:20, stop it again. Between 10:20 and 10:30, no entry. Same logic. 10:30, huge volume impact. They might continue, they might pull back. There you don't enter any trades. And once you enter the trade at 10 o'clock, consider cutting it into 10:30. I mean, already consider cutting it into 10:15 if it's running far enough. So I'm very often I'm already done at 10:15 once I enter the trade at 10 o'clock. If you watch my trades, sometimes they run into 10:30, but 10:30 again, checkpoint. Is it already done? 10:30, the next 15-minute traders come in, they push the market. They might continue, they might pull back. So if you are in an R3 or R4 trade, just cut it. Just take the money and wait what it's doing. Not always, of course. Sometimes you have runners that are going far, but if it's not 100% clear, just take the money. Then again, 10:30, very nice entry spot. Then the first 5 minutes, I would be careful again. But then the next 5-minute bars, 10:35, perfect entry. Then 5-minute break until 10:45, same logic. Then 10:45, another sweet spot entry. Then 10 minutes break until 11 o'clock. And then same logic applies for the next hour. But then it softens a bit. I mean, this is where the majority of the stuff is happening. Into fourth hour, after 11, it weakens a bit. I mean, you still have to watch 15, 30 minute and so on, but there is, for me, it's different. I'm not scalping there anymore. There I really only look for end session runners and think about, do I really want to hold a trade longer and I'm betting for this end session runners, or is it already done and I have my trade already and I just take the money and call it a day. So I think this is my edge. That's my secret. I share it here with you. I will show you now in the charts how I do this every day and how this logic helps you to structure every session, and your confusion will be gone very quickly. So let's look at it. So here, first example, gold, 3rd of March. So that's this Monday. And we always, as you know, we start off with the weekly template and look at the higher time frame context. Everything you see here on this page is done by my indicator. It's TrendPredator Pro. So it marks you all the levels you need to look at that here, the daily highs and lows, for example, the weekly and monthly separators, the 8-hour levels. Here you see the extensions, previous day low, high and close, and you also see the breach levels. So these are the breakout levels of the 4-hour, the daily, the 8-hour, the week, and the month down here. And then here you see on this table, you see the bias across the different time frames. So the lower time frames show you your entries, 4-hour, 8-hour. You really want to have those in your bag for your entries. The higher time frames are your signals, like the Stacey signals here. The day, for example, in 3 days of shorts. The week you see in breakdown. Current week, of course, at the start inside with the first red week. The month is still in breakout. So here is the monthly breakout level, for example. You see the week broke down. This was previous week low. Now this is the weekly breakdown level. Trading below. You are in a daily fake out low because this was previous day's low. This is day 1, 3-day cycle, if you want to call it like that. Now we are in a day 2, daily fake out low. And you see here context, a reversal continuation means daily fake out low reversal. And you're currently looking at a potential continuation of this reversal to the upside. So that's kind of the logic, what you see. And then you see Asia and London trading sideways into New York. A very wide 8-hour range here. And now coming into the New York session. So not much happening on the day. Still in a range day. But overall a rather bullish situation, especially it would be bullish once you reclaim this weekly breakdown level. Then you would be in a weekly fake out low as well, and you really would look for a long from here. So that's kind of the first thinking process coming into this session. So now here, one time frame lower, already with the major time rotations marked, 1st hour, 15-minute rotation here, then here rotation into second hour, New York open, open box, 10 o'clock rotation, 30-minute rotation, 1 hour after session. So let's see what it does, and let's think about what's happening. So here we come into the session, previous day high frames it, previous day high, previous day close. So these are important levels, and we have the 8 hour here, 8 hour high and low, 4 hour high and low is there. London is here. And then you see first hour trades, and here immediately with my indicator, that's Igor Sessions initial balance. I will put that into the description box for you, or you can also see that on my Discord. That's an indicator that marks you the first hour high and low dynamically. So this then marks your first hour. So that's kind of your first hourly candle. You see no real strong pivot. So first hour more or less goes sideways in the range and prints a high and a low. So from there, the situation is still unchanged. Definitely no entry here as a potential pivot, and also no entry into second hour as most of the times. Then we see what does it do. It pushes into New York open, and you see there New York open immediately blows off. So I probably would not take this blow off because this is too far for a first bar entry, and then your real setup confirmation comes up here. But as you see, the second candle here, the second 5-minute candle, or the third one, there you don't want to chase that move anymore, because then they pull it back on you. So there you see, this would be your trap. Once you take this breakout trade with the open, they trap you immediately. Up here, they stop you out. They retest the first hour high. That's interesting. You see that here with a wick through and then working into first hour high, coming into 10 o'clock rotation, doing a 5-minute fake out low, strong switch candle. So this is what you want to see. You have an uptrend, you reclaim that level, and you immediately, you see here with TrendPredator, you see here all time frames bullish, and it immediately identifies the context, reversal, continuation into uptrend now, because everything is bullish. Previous fake out low, so previous days fake out low, continuation, low hanging fruit because you're in an 8-hour breakout. Trend trade 1 star because it's already overextended on the 8-hour, but still this would be your entry. Then into third hour, you see it works away from that. You're in the middle of the opening box, but you have a lot of space to the opening box high. And then you look what they are doing. You see from this time rotation, they push it into the next 30-minute rotation. So typically I would already cut the trade here. And you see here why, because they immediately do a fake out high and pull it back down, and they already come here back 50% of your trade. But still afterwards, they grind further. So here is the end session rotation, and they go further, and then they conclude the whole thing with the opening box, 1 full expansion. You know my typical pattern, and especially then here the next 4-hour rotation. That's definitely your exit once you try the runner. 5-minute fake out high, 4-hour rotation into the 1 full expansion of the opening box. That would be your exit and a potential continuation trade, or you held it from there. So that's a very nice continuation session. First hour puts in the low, second hour breaks out, retests with equity open, traps shorts, breaks out as a potential trade. Then the second half of the third hour traps shorts again, fake out low, continuation, completing the 1x expansion. So that's a very nice continuation session, one of the pattern I'm looking at. So another situation, silver, actually price action from today. And I took also this trade. I can explain it to you. So it's March 13th. We had PPI today. So you see here, it was trading here into the session. You see month in breakout, week in breakout, day in breakout, 3 days of long, yes, but all time frames were bullish. I also had that on my heat map. So we were looking at a breakout, previous day breakout continuation situation in an extended uptrend. So what did happen? Here we had the start of the session. You see here first hour high and low. So it was here grinding sideways. Then PPI hit. It gave an impulse to the top, but not too strong. So we marked the MRN level here at 830. It came up, then traded back down, and then you see here with the 1 hour rotation, also 8 hour rotation, it locked in the low with a 5 minute fake out low, and then here concluding the first hour low. Then from there it traded as we've seen very often. You could have taken a long trade here. I didn't even watch because I was recording the video. But here you see it then pushes into the open, and then the open blows off even stronger to the top. So this was equity open. We marked the equity open level. We marked the New York open time. Then here it breaks out of the 8 hour and immediately with the 15-minute rotation. You see that here. That's why we don't enter at these 15-minute rotation, and you don't take the breakout here. So either you take the blow off from the open, but I wouldn't do that because you are right below the 8 hour level. And once you're in this bar here, it's too late. Also closing price is here. So there you see 15-minute rotation. 945 engulfs to the bottom and goes all the way back to the New York open level. Then it prints even 2 more candles working into the low, but not letting out those lows and also not coming back to the MRN level. Then you see this fake out low here confirmed the open box low, and here your open box is closed, and it immediately with the 1 hour rotation, you see here nicely it engulfs to the top. I actually took an aggressive entry down here as it reclaimed the New York open level as a first entry. I normally wouldn't do that because you had an 8 hour fake out high, so that's a bit of a counter trend here, but the overall situation was so bullish that I thought I could risk it here. Then after the breakout at that closing price, I dumped in another position. My first target was here, the 1 full expansion of the open box. And then you see, I mean, it was not pretty here, but once it broke out of the open box, it just consolidated. Here is, I think, a weekly or a monthly level. And then it just went further on. And then I took here the 15-minute rotation blow off to the top. Once at the end of a trade, I see such a blow off candle into a 15-minute rotation. I cut the trade, and you see it pulled back, but then it completed everything back to up to the 1 full expansion of the open box. And here you have your 1 hour rotation, session end, and the pattern of the session is clear. So here another nice continuation pattern. You see dump into the session, first hour puts in a low, then it trades up into equity open traps the high, traps the low, and then you get into third hour. As often you get your real move, and it moves all the way until a 1 full expansion of the open box. So this is something you see all the time. This is one of my favorite patterns. I took it today with a huge trade. Put that on your wall. That's a continuation pattern of the session template. So now here a reversal into downtrend session pattern. It is DJ30 yesterday, Wednesday, 12th of March. Again, let's look at the overall pattern. The week is in breakdown. And also the days in breakdown. So it was a breakdown continuation, low-hanging fruit, all time frames bearish, as you see here. Day in 3 short, overextended, okay, but still a nice pattern. What happened? It came up here from London, pushing into the New York session. Here is your runner into the session pattern, as I said. Then you get your first hour here, trading into the session. Here would be 15 minutes, nothing happened. We had CPI at 8:30. CPI pushed up here into the monthly closing price, up here actually, and locking in a high. So that's a massive stop hunt, and such a wick is definitely a sign that the liquidity on this side is already gone. Then they engulf it back down. You mark the the MRN level here, and watch it, what they are doing to it. Then you see here 15-minute rotation locks in a low, pushes up into 1 hour rotation with a 5-minute fake out high with the first hour. And that's exactly the entry backside of the week runner from the 8-hour rotation. This is would be this pattern. You see it here. You can typically wait for the second 5-minute bar. As I said, you have a nice 5-minute fake out high here at a level, and then you could just let it run from there. But you will see it doesn't. You don't necessarily do that, because here is the MRN level, so it's always nice to see that they lose that. But here, as always, or as often, you get the runner into equity open. Here is the open price. It just does a little wick to the top, but that's always good to see it. So they trap longs that try to go off the bat, immediately trap them to the low, and lose the first hour low. Here is first hour high and low, so they break down from the first hour. That's bearish. Then they break down the 4-hour here, also bearish. They break down the 8-hour, also bearish. So open box just pushes down, makes a new low. Then from the extreme, you need to be careful. Now we are in a continuation situation, so you don't want a long here because everything is bearish, as you see. But also you need to be careful to just short from there. I mean, shorting from the extreme, I do it sometimes. Of course, you can be nastily wrecked doing that. But as you see, that's the continuation pattern. Zoom back to the trapping pattern. We are at the extreme. They do 1-2 candles with nice wicks to the bottom, up again, trapping longs. And then they grind around a bit still, but pushing down, going sideways, and then with the 30-minute rotation. I don't remember if I went in here or there, but I think I took this 15-minute rotation and scaled in one more position at this 30-minute rotation. And then from there, they just lost it, moved down strongly into the end of the session. And you see here, I think I probably even cut it already there with the 15-minute rotation at the extreme. That was already an R4 trade. You could have held into the end of the session, but there was a pullback. I mean, you never know. But typically, if I see such a push strongly in direction of end session into the 15-minute rotation, that's all I need. Then I cut the trade and call it a day, taking the money. Here you see everything bearish. TrendPredator shows it to you. You see the context downtrend overextended. The setup was a breakdown continuation, low-hanging fruit in a trend situation. So that's a nice reversal pattern. Working into the high, faking out, stop hunt to the high, rolling over with equity open, printing an open box, then sideways, losing the open box with time rotations, giving your trade. Very nice pattern. So one more example, that's gold last Friday, non-farm payroll, a do-nothing situation. I mean, you could trade it maybe as a reversal, but you will see it's a ranging situation where the whole session is a ranging formation. So there you see first hour, you come into first hour, and the whole pattern is conflicting. So we have month and week, breakout, fake out low, week first red. The day is in fake out low and in a fake out high. So this is a conflicting situation overall. And the 8-hour was in a breakout here. So we had a conflicting situation. Still we observe what's happening. First hour starts here, and then we trade into the session. Non-farm payroll, huge candle here to the top. So we have a low locked in right before non-farm payroll, printing here the first hour low. Then we have an MRN level here, non-farm payroll pushing up, breaking out of the 8-hour, printing here the first hour high, rolling over with a 8-hour fake out high, trading back down into 9 o'clock. 9 o'clock here locks in the low, and you have here first hour high and low, and trading back inside. Then it pushes from the first hour, and you see here again, first hour could be a nice entry from the low, just running into New York Open. This could be a scalp that I took a lot in the past, not anymore. And you see the second candle is your entry, and then you don't want to enter anymore. Then New York Open continues the long, breaks out on the daily, even prints in a high here. So we are at the extreme, and immediately breaking out and printing a fake out high with the first candle. So this was not a breakout situation I would take typically, because the overall it was too conflicting. Then you, with the second candle, once you wait what it does, you see it's a fake out high here, marked by my TrendPredator fake out that marks the candles. These green ones are the switch candles. The red and the light red and light green ones are the fake out candles. So this is a fake out high, and then immediately you lose the open box high with a switch candle, meaning this bar broke out and this bar crossed back inside. So this is a trend change. So you could take an open box range trade from here as it loses this level here, but you see at first it was trading above the first hour high and above the daily level here, so it's a bit tricky. But then here you lose it with 30-minute rotation. I didn't mark that. This could have been a nice entry. 30-minute rotation, re-entry, range trade, open box trade until the open box load. So this could be nice. Just into the next 15-minute rotation, you see here it would be 9:45, locks in the low, slamming into first hour low, into MRN level. So this would be your exit then if you take this range trade. And then you see from here it just grinds up into New York Open level, goes sideways, and then loses it, and in the end even completes again the open box one full expansion. So this is a contained situation. You often see that already once the open range here, first hour high and low, is pretty wide. So you rather look for a range. And then I would also not take the breakout, because for a breakout you need a coil. But once you have already peak formation high, peak formation low in a wider opening range, you need to be a bit careful. Then if you're careful, you wait for the second candle to print. If you have a fake out high, no long entry. Then it loses the open box high. Then you're already short biased. Once it loses this levels here, then you have here nice time rotation, 30-minute for a nice range trade here to the low of the session. The whole pattern, the whole trade would be within the session. So these are the examples. You've seen continuation patterns, you've seen a reversal pattern, you've seen a range pattern. Just do it yourself. Just go back at the charts, go to New York sessions, mark first hour, second hour, third hour levels, mark equity open box, and just try to read it. You know, when are they printing the high and the low? Where is first hour high and low? Where is the equity open level? What are they doing from there? And especially look at the 15 and 30-minute rotations, and you see here it's all timed and measured, as Stacey always says. If you enter, really wait for the 15 minute, wait for the 30 minutes, and then place your trade within these time rotations. So I'm typically or often just take 15-minute trades. Here, entry 30-minute rotation, 3 5-minute bars, out, done. That's like probably 150 pip, I don't know. So that's how you do it, and you don't hold on there anymore after such a move, hitting into the low of the session. There you just cut the trade, and you also don't wait for the reaction, because you see these green candle, you don't want to wait for that. That's probably half or a third of your profits. So just cut the trades once it hits the level, first touch, out, take the money, and go away. Thanks for watching with me for so long. I hope that was helpful, maybe some key takeaways from that. So really be clear, the session template frames every session. You see that you have always the same levels, the same time rotations, the same things happening every session. And you know exactly what to wait for. Wait for the volume to hit, wait for them to put in the stop hunt, wait for first hour, second hour, third hour, equity open. You know what to expect. You mark it on your chart, and then you trade away from that. You look at the open box. It's always the same thing. Then treat each moment along the session with its character. So don't just trade randomly along the clock. Now look at my charts. Every little bar has exactly the same character every day. So is volume coming in? Do you have already a lot of information or not? So the type of trade for each candle is clear. You exactly know the characteristic of every candle. Really think about that. Be aware of it and trade accordingly. Then time rotations are key to everything. So never take a trade right before a 15-minute or a 30 or especially not a 1-hour rotation. And typically also try to be out of the market with the 1-hour rotations. They typically do a huge move from there. You don't have no idea. New traders coming into the market and they do something. And the question is, do you want to bet what they're doing or like gamble with it? Or you wait what they're doing, and once they show their hand, you just take the continuation. Then, as we've seen, most importantly, wait until you see through the manipulation and then strike. Don't go into the market and let them manipulate you. Don't let them push you in, and don't go in before the manipulation and gamble. Wait for them to show it and to trap someone else, and then you ride them punishing the other traders. That's your trade. You ride the trap. That's it. So I hope that was helpful. So if you like that type of thinking around trading, look into the description box. You might want to join my Discord. It's free. We discuss that stuff all day. There is coaching available if you like. I have a playbook, an extensive one, where all these documents of my YouTube videos are in there, so you can reread all of that stuff if you like. Also, you can have a free trial of TrendPredator. The TrendPredator Fakeout is for free. You can just take it, the one that colors the candles. TrendPredator Pro is my major trading system. You can visit my WOP and can use it for 30 days with a free trial. You will see it does all the analysis you need automatically on the chart. It shows you the setups, and then you just mark a few levels like this, as I showed you here into third hour. Then you look at the open box, you look at what TrendPredator shows as an example or as a trade. You wait for a little trap, 15-minute trade done, R3, 1 day at a day, take the money, do this every day, and you have a profitable trading system, and if you like, a new profession. So hope that was helpful. Thanks for watching with me, and have a nice day.